Hello everyone, this is Venkatesh Deshpande. In our previous lectures, which I started with, we covered a lot about the different asset classes in whole, and now in the last lecture, which was lecture 2, we have started exploring each one of them from the bottom. Like for example, the last time we had a discussion on um, about the debt as an instrument of asset creation or asset class. So this uh, this particular exploration of ours to all a great deal with all different asset classes. So is in consideration of achieving the financial freedom and long-term wealth creation. So how would we leverage all these tools and all these instruments, different asset classes or instruments to achieve that particular goal? So that is a prime objective. And by doing so, we need to get in to the details of these asset classes one by one. As we started our journey in the last lecture, particularly on asset classes, we explored a lot about on debt investments. Now let's see what we can you know go and understand, dive deeper on what is an asset class and how can we leverage this asset class to build a long-term wealth so over the period of time. So when I talk about long-term wealth, the time horizon is all based on your uh, specific to you, basically the way that you are positioned now financially, and the age at which your life journey is now, and also the aspirations that you have, put together everything. You need to tailor around all these aspects and then build your financial long-term wealth creation. So in order to do so, these are the different categories of the vehicles which we can achieve the long-term wealth creation. So now no asset class will be useful if you don't understand it fully. So I hereby not recommending you to do this and do that. My prime objective is to educate you and make you understand what are the offerings, advantages, disadvantages, and how can you leverage this as an asset class to build your wealth. So it is, I always suggest, taking these classes and going through my videos should be a trigger point to you, right? So anyone who want to aspire, I mean, who want to have a better financial, life and better financial position going forward should have a particular goal, which is self-learning, right? So you can go ahead, do self-learning, understand these are the trigger points from my side, and also these may not cover all the 100% details of this particular asset. So learning is a key. Keep learning, keep understanding things, and that is the key and the greatest differentiator in terms of your personal magnification of your personality. So basically, if you want to really have a greatest knowledge that helps you to understand and do all better decisions in your life, so that will carry a long and better weightage than anything else. So let's understand and go ahead with the topic. So when we talk about the when I talk about gold as an asset class, we have to consider all these things, three things, like basically what all it offers, particularly how the return from the gold, and what is the fluctuation, or you can say volatility around gold, and how risky or safe this bet would. These three things determine the investment principles of any investor against any type of asset class. Now, considering all these things, we'll discuss them one by one. So, long-term average return for this gold in India is all around 11% CAGR, which is quite, you can say, decently less than that of our equity performance, right? So, and when we talk about long-term average, so few cycles of years, or you can say few blocks of year, you may have a negative return to the gold, and few blocks of years would have an exceptional performance. This is an average return over a really long period of time. So it's a historical average. So hence you consider it as 11%, which is still less than that of our equity as an investment class. So now coming to the different vehicles available in the same asset class to position ourselves and invest in. So the greatest one among right now is a sovereign gold bond fund. Sorry, sovereign gold bond itself. This is a program which is being run by Government of India through RBI. And among all the gold investment options which I have explored till now, this is the best suited one. Right? I will discuss its merit. Rather, you can say it doesn't have any disadvantage if you yourself locked upon your decision to invest in gold. Sovereign gold bond is best suited to you, right? And then there is another vehicle which you can invest in gold is gold mutual fund, gold ETF, gold coin or bar. All of us know this, and we have anyway gold ornament, which is like the ladies are even men's now they can prefer for gold ornaments. So these two, the below two are physical form of gold holdings. So why I prefer sovereign gold bond fund? So basically, when we think of gold as an investment, so it is basically a lot of concern about the gold in the form of how do we store it, how do we buy it, and how we can ensure that we are buying the right thing, right quality, in the sense like purity in terms of the purchase. So when we talk about all, this is all going to be the challenge if you do purchase the gold through physical form. So when we talk about sovereign gold fund, the features are like this. So it is sold by RBI. The Government of India assures the guaranteed 2.5% interest for your holding. For example, if you have put one or you can say 10 gram of gold, then each gram nowadays carries around 5,000 rupees, and you are putting 50,000 there, and 2.5% of interest will be paid to you over the period of your investment holding. And that investment, sorry, that the interest will be given to you in 6 months, every 6 months. Right? So that 2.5% of interest will be paid to you. This is the greatest advantage. None of the below things will offer you. And just understand, gold ornament, gold coin, gold ETF, gold mutual funds, these all are, their performance, that the return is exactly the same, maybe very, very negligible variance around how they will be traded and what is the demand and supply. But the market rate for all these remains same. It is only the way that you possess these, you possess the gold in these form. So you can buy through sovereign gold bond, you can buy mutual fund of the gold, you can buy gold ETF, gold coin or gold. But it the entire gold value is exactly the same as that of what it is being traded in the market today. So hence you don't have a dilemma. Okay, is it like better to buy a gold ETF? Is it which offers you me the less value, or you can say more costly than other things? No, it's not like that. There is no price difference. Rather, whatever, let's say if you buy a sovereign, it is sold in terms of 1 gram, 2 gram, 3 grams. When you want to buy a mutual fund, it is going to be the net asset value of that mutual fund. But still, if you calculate the return, or you can say your amount invested in the way that gold progresses over the period of year, so the price movement remains same. So hence, what I'm saying is, it is up to you which vehicle you want to select to, but you are buying the same thing, same amount, same rate of that particular product. For example, in the gold coin case, or in the gold ornament case, there may be this thing. If the gold coin is 24 carat, you will be paying that particular price, and the gold ornament generally won't be of 24 carat, it will be 22 carat and 18 carat. Based on that, you will be paying the price. So in whole, you are going to pay for the purity, and the rate is same across all the vehicles. I mean, the price is same across all the vehicles. There is no difference in that pricing, right? So hence, now we need to intelligently select what is the best thing for me to invest as a gold and hold it in my portfolio. Okay, so the gold bond, the sovereign gold bond offers the out of advantage, which is 2.5% of interest. Sorry, yeah, interest over the for your investment period. So that's the greatest thing, and it is India sovereign, backed investment. Hence, there is no risk of defaulting on the commitments from the RBI side because it's a sovereign thing. And the purity is not under the dilemma here. It's pure, right? It is how they and basically it is a pure in the sense 24. It's 99.9% pure. That is the value that you are going to get when you redeem it. Okay? So the purity is assured, and there is no risk of storing the gold in the physical form in the case of silver. So hence the best, and also another important thing is when you sell it. So it's basically it's a sovereign gold bond, which is of having a lock-in period of 8 years to the full redemption, or it is minimum lock-in period is 5 years, right? After 5 years you can redeem it for the certain conditions, but you can 100% redeem after 8 years, right? Once you redeem your gold after 8 years, there goes sovereign gold bond, then you pay effectively no tax on it. So for example, now your gold per unit you bought through sovereign gold bond is 5,000 rupees. Now after 8 years, if it moves to 8,000 per unit, now it is 50,000 for 10 grams. If that time when you are selling or you are about to redeem your sovereign gold bond, if it is 80,000 rupees per 10 grams, then you will be paid exactly the same amount of that market for that day, and you will not be taxed any penny on your redeemed amount, both principal and interest, or you can say it's nothing like principal interest. It's at that particular time value will be given to you with no tax deduction, right? But this 2.5% which you earn over the period of your holding period of the sovereign gold bond will be taxable based on your current personal taxation slab, right? So these are the things. And gold mutual fund is again a way of investing in the mutual, gold, but through mutual funds, right? So the mutual fund companies will buy gold for you. This is also the E form of gold in the sense it's a demat form of gold holding, right? And gold ETF is it's basically equity traded fund. So I will more detail talk about the mutual funds and ETFs, but right now you can also think that gold ETF is also uh, online, or you can say electronic form of the gold, right? So the gold coin, gold bar, and gold ornaments, anyway, so overall, putting everything into perspective, I would suggest if you are thinking or if you are finalized your approach of investing in a gold, then for any investors in India, sovereign gold bond is the best thing to do. Let's go ahead with the advantages and disadvantages of the gold as an asset class. So the first advantage when it comes to gold investment is hedging against the inflation. So inflation, all of us know that it is the it's basically it makes your 100 rupees buying power less for the period of the upcoming years. For example, 100 rupees something bought today, okay, for the same project, so for the same product you need to pay 105, 106 rupees next year, right? So your 6 rupees, 5 rupees, 7 rupees every year will be eaten by the inflation, or for the 100 rupees currency. So that's a problem. And another thing is it is still a great protection against economic turmoil in the world. So for example, if there is a war situation, if it is an invading happens, one country invading other country, and these are the economic turmoils of the world or the global political turmoil in the world. So that time what happens, the trade collapses, and a lot of disbelief happens between country to country, and currencies and their valuations comes under the question. So be it whatever the situation, your value of the gold remains same. It will not collapse. It will not become a useless kind of thing, because there the world has experienced historically a lot of countries currency got devaluated, and a lot of countries have lost their sovereign status. So, but gold never lost its presence, or it lost its real asset value. Hence, it is going to help you in a greater depressions and economic turmoil, political disturbances. So it's the investor of the gold will sail through these all situations smoothly, and it's still a better against all currencies in the world. For example, imagine in 20 or 30 years of your investment. For example, if you invested in any of these currencies such as dollar or pound and all, so they somehow lost their value over a period of time. So there is a currency investment concept. So these currencies will get devaluated, derated, but the gold will not going to face such situation. So why we are calling upon the similarities between currency and the gold here. So it is same. Basically, earlier, before Nixon of United States president coming into the power, so earlier the world currencies were printed against the value of their gold equivalent, right? So now the situation is not that we used to call as a gold standard. Now it's not, no more. No country has to secure or has to put an equivalent to the gold in order to print its currency. Such standard is gone now, but still all these currencies cannot justify their value if there is a turmoil in the world. Hence gold justifies value. That's one advantage we have. So, and a dice of diversification. Why as an intelligent investor one can think of doing a gold investment is this point which I'm highlighting right now. And a dice of diversification is very important. Basically, you cannot put everything into one basket and rely upon it and okay, let's everything happens great in that particular basket. As an investment principle, we can have a diversification as a minimum thing to really make sure our nest eggs are growing properly and with less risk compared to the other approaches. Hence, diversification in the sense, have some assets into equity, have some assets in debt, have some assets in the gold, and have some assets into the real estate. So diversifying your financial assets across all these categories will save you in unfortunate situation happening in particular class or area. So for example, if the equity market is doing really bad, that time the it may be the situation that the equity market is doing not so good because there may be a situation favorable to the gold. For example, that time it may be a higher inflation. The higher inflation will pulls the gold value up, and hence your investment made in the gold will rebalances your losses from the equity investments. Hence, it's a hedge against the inflation as well as hedge against the market fall, right? In the equity market fall. And an optimum long-term return invested in appropriate time. This is very important. So you cannot put your money into a gold at any point in time, because gold by nature is a commodity. You need to understand its price fluctuation, and when the gold is at the average low price premium, that time it is better to invest. right? So basically, because these commodities will have a cycle, and based on the cycle, if we need to intelligently invest, then obviously we'll reap the good benefit of this category as well. Let's understand the disadvantage of this class. The risk of all commodities applies to here as well. Here, the risk of commodity in the sense, as take an example of crude oil. Right? If 100 countries are 50 countries are producing crude oil and only 100 countries are consuming, then maybe that's an equilibrium scenario. But not the but that's not the case right now. Entire oil is consumed across the globe, but there are only few countries who have oil surplus, who can generate the oil. Hence is the value of the oil, which is growing day by day. So it's all about demand and supply. Commodity prices fluctuates across the globe based on their demand and supply. Similar happens to the gold as well in many situations where it is traded as a commodity. So if the demand is so high, if nobody is buying gold, obviously the gold price will go a little bit low. But if there is a high demand, then gold prices tend to go high. It's a nature of commodity. So this is one disadvantage. As gold doesn't produce anything, and it itself is not a product which we producing something in the sense, for example, if you invest in a company, that company grows, that company does a lot of manufacturing. The 50 units manufactured today, it can grow and its manufacturing capacity over the period of time, and it can manufacture certain products over the 50 times or 100 times more than what they are doing right now. Gold has nothing of that sort as a producing thing for the period of time. So hence it's a commodity. It itself has particular price tag, and that can be distorted. So this is one of the disadvantage, and maybe favorable at all time, but as we discussed last time, it was a market cycle related thing, and as the commodity cycle is at the high, you should avoid the gold investment, and returns are somehow below than equity and bond options, right? So you can earn better return over the period of long time in equity and bonds than compared to gold. That's one disadvantage. And nowadays, I mean, basically in the recent past or few decades or couple of decades, at least we can see that the governments are intervening the price movement of the gold. So this is not a great sign, because if government intervenes, it will not tend to the gold will not move upward as well as downward, because if there is a price management happens of any for any commodity or any particular asset, that's not good. So the price should not be controlled and intervened by any of the bodies. It may be the government or trade bodies or anything. So that is not a great sign of anything which is getting traded freely on the demand and supply. Hence, these are the disadvantages. So, putting my perspective on gold is this. So, if you have when we're talking about asset class and asset allocation, let's say, for example, if you have 1 lakh rupees, let's take an example of 1 lakh rupees. Your asset allocation. Okay, let's talk about other asset allocation later. But for 1 lakh rupees portfolio, always my suggestion would be not more than 10,000 rupees. Okay, maximum 10% of your total investment plus should only be there in the, and that also particularly to your discretion. So if you understand this particular asset class well, and you know the price movement, you know its nature, by nature it is a commodity, when to buy gold and how to buy gold. How to buy gold is also important, which I have highlighted. I completely suggest you, I will remove off your ambiguity of how to invest. How to invest is definitely unambiguously it's a SGB, okay, sovereign gold bond fund, and you can go ahead and invest it. But why investing? Why investing? How can I better manage the disadvantage and advantages, and how better I know about gold? These are the insights which I gave you, okay? And this will definitely help you right away at the moment. But you can just have a more detailed and deeper understanding of this asset class. before you want to commit to an investment in it. So this is one thing. And another perspective I have is, let's say gold not more than 10% of total port. And another perspective is, when you buy gold, you should understand the price movement of it. So you cannot buy gold at any price level, right? You should understand what price is appropriate, what is a mean over a period of time, and when to enter into the. That's also one thing. And when I'm saying SGB is better, right? SGB is better, but has a little disadvantage. What it is its lock-in period. It's an 8-year lock-in period. If you want to have an access to your money for the period of 1 or 2 years, definitely don't plan to buy a gold. In case if you want to buy a gold, such a situation where the price of the gold is at the bottom right now, and now investing in SGB to get an advantage of this price movement in terms of upward price movement and get out of it within 1 or 2 years, SGB is again an option, and hence you can just go for gold ETF if you know the price of the gold that is going to go up in 1 or 2 years, right? But in other way around, as I always advocate for the long-term investment, hence investing in gold over the long term is always better than investing gold in the short term, right? You never able to predict the commodity market cycle. It is very, very hard job to do. You can predict certainly based on some situation, the stock market cycles, if you are so experienced, but it is really tough for a so great investor or so called, the great experienced people in the commodity market to judge the market cycle. Hence, this is another point to take. Hence, go only for the SGB, which will help you to not fall for market cycle, fall prey for the market cycle. So have a steady investment for the over period of long time, which is 8 years. That will definitely help you. Okay, now when I said 10%, not to cross 10%, it has a meaning because you want to rebalance, or you want to make your nest eggs distributed across other different asset classes. But gold continuously for the historical period, it underperformed the asset of equity and bond. Hence, I would suggest not exceeding your investment over the 10%. So have 5 to 10% of investment in gold, not more. So here I want to conclude on gold as an asset class. There can be a lot of things and a lot of more knowledge needed on this aspect. But my current takeaway from this lecture is going to be, if you locked in your investment decision on gold, buy SGB, sovereign gold bond fund. Don't exceed your investment 10%, 5 to 10% or more, and always understand gold is a commodity and you need to get entered into the gold at the right price movement, which is hard to judge, but try best to do that. And in order for us to conclude, now gold is not at very high valuations. Gold is appropriately priced right now. So you can think of going for the gold in the current situation as well. This is completely my assessment. It need not to be a recommendation to you, and you can think of buying gold at your own decision. Okay, thank you.